All right, good morning. Let's get on with it. Happy day. It is Monday, which is a great opportunity to get out of bed and make some money, honey. You got no money, you got no car, you got no woman, and there you are. And my microphone's off again, so why don't we just get on with it? Let's go. All right, let me remind you that trading is risky. It is not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning, everybody. Welcome to Forex.Today. My name is Wayne McDonald. I am a currency trader. I'll be your guide today through the charts, both technically and fundamentally. Thank you for being part of our community of 17,000 foreign exchange traders. Thank you for the effort that you put into learning this thing we call Forex. Thank you for your questions, your comments. Thank you for the little likey button clicker thing. We appreciate that. That tells YouTube that this is quality content and perhaps it should just be shared. I'd like to thank Traders Way for being part of our community as well. Hey, you're going to need a broker one day. Why don't you give them an opportunity to earn your loyalty and respect? If not today, how about tomorrow or soon? Well, it's just an opportunity to earn your loyalty and respect. They're trying to do that by being here every day, just like me. So, great. Ask questions, get involved, take notes. Let's do it. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. This is the Get Rich Slow channel. So here we are, Traders Way MT4 variable account, just in case you're wondering. Morning, Stevie. Y'all, all y'all. All right, so what's going on in the world? Grandma Yellen's out there pushing for the stimulus, says, hey man, we can throw this 2T out there, it'll create inflation, and it might, it could create inflation, but the Fed can take care of that. We got tools for that. She's like, I used to run the Fed. I know what Jay Powell can do, and we can deal with inflation down the line. So that's her sales pitch. Larry Summers, who used to be, what was his official title? The head of OECD? The economic, hang on. Larry Summers is a Harvard dude. Former U.S. Secretary of the Treasury for International Affairs. I think he did more than that. Former Vice President of Development for Economics, Chief Economist of the World Bank, Senior U.S. Treasury Department official, former Director of the National Economic Council, and Harvard, education at Harvard and MIT, but he also ran Harvard. I think it was more than the B school. Was he president of Harvard? I can't remember. President, yeah. Okay, yeah. Cool. All right, so anyway, so Larry says, hey, Janet, it's probably too much. But if you're going to do $2 trillion, you should make a lot of changes. Okay? One of the things that an economist will tell you, if you just give poor people money, it's a no. This is gonna be sensitive. You don't misinterpret what I'm saying. Okay? It's a waste. It's not a waste on a human scale, but economically speaking, it doesn't get the results what you're trying to do. What you want to do is somehow create jobs, create reinvestment, create something productive, build bridges, build roads, build hospitals, build schools. So if you think of the New Deal of the 1930s, under Roosevelt, they did that. They built schools, they built hospitals. And for example, if you go throughout the United States of America, you'll find, especially in small towns, you'll find beautiful post offices. Beautiful post offices. All with hand-carved stonework and everything, and art, and just beautifully done. And that was all done in the 1930s during the Great Depression, and the government had to create demand, right, by building stuff. And if you wanted food and you had no jobs, the government said, well, we'll pay you to build a post office. We'll build you through like the CCC, and I use their stuff a lot, even here in Georgia. There's lots of, and I can't remember the CCC stuff. But anyways, what it took is unemployed men, and they did things like cut through the forest hiking paths. And then they built infrastructure around that. All out of stone, all hand done. Beautiful stuff. So if you want a job, you can get a job. And the output was the government used its money to create demand for projects like, hey, let's build a 500-mile hiking path, and along the way, we'll build the ranger stations out of big, beautiful stonework and big hardwood floors and a giant hearth inside. And, so now you can go through the United States, and this is a normal thing to get to a ranger station. And they're beautiful versus more of a transfer payment. And by the way, transfer payments are not included in GDP. You're probably wondering about that. I'll tell you. Versus just handing out money. Because it's helpful in the short run, but it creates systemic unemployment in the long run, a.k.a. check out Spain. So anyway, so Larry Summers is like, hey, I could even deal with the $2 trillion, Janet, but you should probably take that money and create create the economic outcome that you're trying in a different way than just handing out money. So anyways, there you go. So you can Google it. Great insight on the ECB weakening the euro, and great trade idea in Euro Zero. Right on. Cool. All right, so we'll get to all the exotics and stuff later. By the way, happy week. It's another trading week. Isn't that great? So right now, yen is weak. That's risk on. Swissie's weak. That's risk on. Aussie dollar up is risk on. CAD dollar up is risk on. Pound dollar, risk on. Kiwi dollar up, risk on. The only thing risk off is dollar and euro. And that's the cool thing. That's the only thing we expect risk off. It's not really risk off. It just looks like risk off. Again, it's seasonality. So very cool. The one thing we want, we got. Okay? Now the question is, after NFP, oh, look at that. After NFP, we saw some of this weakening here, which could be a sign of good enough. Nenda says, hey, when you have the power to print money, you don't really care because it doesn't affect you personally. But that's a big problem, right? That's called a moral hazard. It's like a bank lending out money to people that don't have any money in the form of a loan and then selling the loan to somebody else, and you don't really care because it's like you're going to sell the loan to somebody else. So you give someone a BS mortgage, and you're like, you highly doubt they're going to pay this mortgage. But you give them the mortgage, and then you sell the mortgage to somebody else. And then you're like, not my problem. And, there's a moral hazard to that, especially if the government then bails that bank out, saying, hey, we know you were doing a bunch of BS mortgages and then selling them off to other people. That's bad, You shouldn't do that. But we'll bail you out. Well, they're going to do it again. So Anyways, there's negative consequences to it not affecting you personally. Okay? Okay? All right. So anyways, you have to ask yourself a question. Do you feel lucky, punk? No. The good enough play combined with the reflation play. And let's revisit the reflation play. In April and May of last year, so almost a year ago, I declared dollar weakness for 5 years. At least 5 to 8 years. The idea for this call back in May is the worst is over. The deflationary period is still there, but it will not become more deflationary. And that had to do with the central banking policy of the United States that was declared that day. So on that moment, I said, that's it. And now we are trading 6 months to 12 months in advance. And the trade is we're going to go from deflationary to reflationary, meaning getting back to normal. Okay? And so that play might be starting again. Typically, that doesn't happen until March. It's only February, but this is unusual. Maybe people are saying, hey, the $1.9 trillion this year didn't exist in previous years, so this year it goes early. You see that? So the average is more like April. Hey, this year it could be February. So you got to pay attention to that. And how much inflation do we need to create to get back? Now, did anyone actually read the Larry Summers article published yesterday? Here's what he says. Okay. Okay. And then you take this and you do this. And we call this the output gap. That's supposed to be one word. Output gap. Okay. This is Y star. This is Y. Oh, that should be pink. Okay. And this is the trough. This is potential GDP. And then this is the gap from where we are to where we need to get going. So here's one of the things that Larry's saying. Okay. Joe Biden, President Biden, and Janet Yellen want to spend $1.9 trillion to try to fill this output gap. And guess what? Larry Summers says this $2 trillion is 300% bigger than this output gap. And he's like, it's a little much. It's a little much. You could get away with only $1 trillion. $1 trillion would be more than enough. 2 is just way out there. Okay? So you want to ask, is the reflation play here, or is it just showing up with fits and starts? Well, yeah, good luck. You have to make a decision. I'm making mine. Hopefully you're making yours. So right now, technically it seems like everything is still the way it was, which is fine. All right. this is from, I think I did this non-farm payrolls. So I said, right here, actually, let me be more specific. The first hour of the new week. Or is that monthly? That's the first hour of the first month. Okay, no, that's not non-farm payrolls. So we did this a week ago, that this would be your buy zone if you were a bull. Okay? Opportunity A, opportunity B, somewhere there's your sweet spot. I think what we were doing is we were front running. So either way, it would have worked. Now we're up here testing the challenge, but I think that's outside the sell zone. So technical analysis would suggest. Okay. Now, of course, it doesn't predict, it only suggests, which means if it does something different, it's quite the opposite of what technical analysis will show you. You're like, well, how do I know which one? Well, yeah, did you do your fundamental analysis? Okay. So I have an opinion on this. What else could we look at? How are we doing for Aussie Swiss franc? Here's the first day of the new month. And that's suggesting up here if you're a bull. If you're a bear, you would have sold here, and that's now done. So there's a lot less bears. The next level of bearish attacks should be here, but I think there's a thinner herd because some of them would have already tried, but I think there's still going to be an effort here. And if there isn't, then that's very much, a thin herd, no one pushing back against the bulls, right? So I hope you're starting to see that when you're at your charts is very important. It's something I spend a lot of time discussing in the swing trading group, whether you're day trading, swing trading, position trading. When you're at your charts is critically important. Not how many hours you're in front of the chart, when you're at the chart. So that the one upside, or there are many upsides, but a wonderful upside of being a swing trader is it doesn't take very much time. What, an hour a week? 2 hours a week? So you could swing trade on Sundays and still have a day job. That's cool, right? So anyways, there's that. There's the beginning of the month. That's a position trade. And so someone taking that is going for 70. Okay? I know it's 200 pips, so it's tiny for a position trade, but that's what it says. I'm glad to see the Swissy back in the game. When the dollar weakens, I would love to see the Swiss stay weak. Okay? Interest rates are on the rise. Even in Switzerland, their negative interest rate is less negative. There are lots of signs of things getting better globally from an economics point of view. So there's some Aussie. We could look at CAD. There's a lot of demand for energy right now. I believe Brent hits $60 a barrel. I don't have it on my charts yet, but I can bring it up if you want. USD Kitty CAD currently in a slight downtrend. Okay. Canada had a horrible jobs report on Friday. Just nasty. Snasty. Gross. That's nasty. So, yeah, sort of neutral right here, huh? What do you want to do on this? On the long term, this would be epic. It might be too early, so I still have to wait for my price. If I want to give it a shot, it would be up in here. So too early for me. Okay, too early for me. Just doesn't look attractive, so I'm not really interested in putting a ton of money into it. CAD Swissy. It's got the up. Once again, the first hour of the first day of the new month is probably the best time to place this trade. Now it's Oscar Mike. Now, once again, someone coming in here will say, well, Wayne, how did you know it wasn't going to do that? I didn't. That's why you have to have an opinion. You have to have a fundamental bias on kitty cat. You're supposed to make that decision. So if you're bullish CAD, and I am actually, I am a bull on CAD, then you would say, oh, maybe this one or maybe this one. Plan A, Plan B. Not more complicated. CAD yen coming down. Of course, I would rather see CAD yen go up. So maybe the timing's off. Maybe it's just the 1 minute chart. Let's take a look. Let me get rid of that. All this stuff going on. I don't know what all this is. Let's just reset it. Okay, so this is OOP. So you are going to look for down before the up. Then you're going to say, hey, man, let's get better at this. I'm going to go on my zero lag and shift it 4 because I can. And it's saying that right now you want this to drop to approximately, let's just call it 82.50 for a bid. Okay. So this is what technical analysis is telling me, down and then up. And then based on that, we'll probably hit it early and it will come back down. So I'm saying down to up to down. Cool. Okay? Cool. Nice. What do you stink? Smell like a plan? Okay. Does anyone have a question about what I did? Because for some of you, this probably new. And so you should speak up and say, whoa, 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 whoa. What was that thing you just did? What? What? What did you just do? And you say, I don't get it. I don't get it. Then you got to ask it. What did I just do? Okay. No questions, huh? All right, you guys are golden then, huh? Golden. Good. Don't need to worry about it. Movingon.com. Commodities, like I said, Brent hit 60 today. Oh, here it is. And $60.24. Nice. Okay. You can see all the price action. Just luftletulium. Just gorgeous, huh? You see how just beautiful that is? Okay. Up, 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 down, down, buy. 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 And guess what the future's going to look like? Well, probably something like this. Up, 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 up. New higher high. Look left. Drag it across. Down, down, buy. Up, 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 up. Okay, if you don't know how to do that, I suggest you take the price action course at fxbootcamp.com because you'll need it for day trading, swing trading, position trading, market open trading. Okay? If you don't know how to trade with price action, I don't think you're going to be successful. I would say gosh darn near every trading strategy that you do. If you don't understand the way that the markets move, I don't think anything you do will work. The most dangerous thing, of course, the one thing that might work for a while is you just simply don't use a stop loss. And you're like, you don't get, so you end up buying high all the time. And you don't lose all your money, you don't lose your money, you don't lose all your money, you don't lose all your money. And then because you don't know how to do technical analysis or price action, you don't see what this means. And of course, eventually you're out because you're also going to overtrade and over leverage. So anyways, whatever. So what did I do here? What did I do? Hey, that's not bad. That's not bad. That's pretty close. Don't you think? It's a lot of prediction. Okay. 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 Very nice, right? Tradable, right? Let's put this in perspective. It just fell a bajillion. And all of a sudden from here, I'm like, yeah, this is good enough. It's going to start going up. It's going to make a higher high, higher low. Okay, look. It happened a half a day early. Yeah, okay. Then, even though there's a big decline, it should still go up because I'm guessing where next week's buy zone is. That's what I'm doing here. Okay, that's why this is the front run. You see that? That's what I'm trying to guess. And I'm guessing here because I drew it all the way back here. So I'm trying to guess it'll go up for a while. Then it's going to come down, and then there will be a buy. And then it's going to come up, and then it's going to come down, and then it's going to make a new higher high. Okay, I mean, it's close. So anyways, and now we got a threat, remember? Now the reason I had this identified is because it was way back here on Tuesday. So obviously Monday's pivot points were not accurate yet, or they were close to accurate. But I was using, like, this is Tuesday. I'm predicting what's going to happen Wednesday, Thursday, Friday, and all the way up, right? Is that right? Or are these dailies? These are dailies. This is Thursday. Oh, this is pre-NFP, post-NFP, today, and up. All right. So anyways. Okay. The buy would be the pivot points, right? That's why we use pivot points. Okay. This is a front run. So that's cool. Nat gas, I'll leave. Obviously, oil is trading with Brent, but notice the beautiful technicals here, guys. Just crazy. Okay. So one of the things I was preaching in here is I say you give up. You lose sight of what's going on because you're stuck on a 15-minute and a 1-hour chart. You guys remember that? That's supposed to be a 1. You guys remember that conversation? I said you give up. You miss out. You know it's going to happen, but you give up. You've been watching it for over 2 weeks and it hasn't done anything. So forget it then. Okay. Yeah, Justin says I should be on hourly. We're planning, so you wouldn't plan a trade on an hourly chart. You would be tactically taking trades on an hourly chart, but you wouldn't be planning. Okay. All right, so that's cool. So gold creating its up. But I mean, look, you could do it here. So I don't want to change the pivots per se. So, well, I mean, let's put something easy. Okay, let's recognize what this is. What is this? This is the bullish buy zone. Okay? And what I'm showing here back on Thursday, okay, is that for whatever reason I've identified this as support, okay, and I'm predicting based on where the pivot points are, where the Friday front run would be. So then the market opens on Sunday and Monday, and here it is on London Open. At some point, if you're a bull, you buy it. I mean, it's just, there's no other way to look at it. Oops. Okay. So we'll leave it at that. Silver, we'll see if there's a new try. Okay. What do we have here? We have the central pivot point. Okay. And we have the M2. M2 is predicting M4, which is up here, I think. I think that's the M4, isn't it? Might be the wrong M4. It might be a confluence. So that's your silver traders taking it back up to 30. I'm not ready to believe that, but it could happen. Okay. Now, did you guys catch the news about the Central Bank of Israel? You guys read about that? No? What'd you guys do all weekend, for crying out loud? Did you read the Larry Summers thing? Did you read about the Central Bank of Israel? The Jews put a laser on the moon and purposely started the forest fires in California. Wait, that's green. that's that representative that lost all their power in Congress because she showed up to Congress and they're like, holy crap, you're nuts, and you got elected. Holy crap. So they stripped her of all her powers. That's pretty funny, though. Like, that's a true story, I think. I don't know what's true anymore, but fake news, right? But anyways, that's what I heard on the radio. Like, this woman from Georgia gets elected to Congress, and she shows up, and she's such a nutcase that Congress strips her of all her powers. That's how I heard it. That's how I heard it go down. She's such a nutcase that it's never happened before where they're like, oh my God, we're not going to put her on a committee. She's not going to vote for anything. Like, she's a total nutcase. But she got elected to Congress. I told my wife, I'm like, oh my God, we live in Georgia. I can just show up to wherever she's from, buy a house, and say, look, I'm less crazy than the person you put in Congress. Why don't you put me in Congress? I'm only a little bit crazy, right? I thought, oh, I'd love to go to Congress. Wouldn't that be great to be a congressman? The distinguished gentleman from Georgia. And I'll say, what's up, y'all? But anyways, what happened with the Central Bank of Israel? They are buying billions and billions and billions and billions of dollars. Russell, that's just my point of view. I don't think the Jews built a giant laser beam on the moon and purposely started the California forest fires. I just don't think it's true. Oh, my made us like she's not? Okay. All right, then. How about this? I don't know her. Let's just say I don't know her. But if she believes that, that's a big stretch. But if some of you guys know her, then I'll back off immediately. I'm not going to challenge you on whether she's good or I don't know jack about this woman. I don't even know what part of Georgia she was elected from. But I just don't, that seems pretty far-fetched. But let's go to facts now. Okay? It's the way that the media and the left are laboring. All right, but all right. But it worked then. It worked. Anyways, let's go back to what we know just to be somewhat plausibly factual. The Central Bank of Israel is buying US dollars. All right. Anyways, okay, let's put this. What needs to happen? Like, what is the catalyst to make any central bank decide to want to buy a foreign currency? Is this too complicated of a conversation? Should I just save it for the swing trading group? Yes, their currency, they believe, remember, not all central banks want the same thing. To make a profit, no, they're a central bank. Okay, so here's what goes down. COVID-19 hits. An entire economy shut. The previous example I gave you had to do with the Reserve Bank of India. Well, imagine now the Central Bank of Israel faces a very similar challenge. Because of COVID-19, right, those in Israel that had money in foreign countries invested in the stock market, for example, in the U.S. stock market or U.S. Treasury market or wherever, when they got hit by COVID-19 and the entire global market shut down, there was a demand for the Israeli shekel by Israelis. Because they're like, oh my God, I might not be able to eat for months. I can't go to work, I can't leave, I can't make money, my company has been shut down or my business has been weakened. Oh my God, I need to go to cash. You understand that? You're going to need cash to buy food. You're going to dwindle your savings. But what if your savings are outside your borders? Well, the first thing you do is you get out of all those savings and investments and you bring all that money home, which means those investments you made were in foreign currency. So if you bought the U.S. stock market because you wanted to buy more Google and Amazon and Facebook, okay, well, you got to sell all those stock. And you got to, right? And then you got to convert your US dollars to Israeli shekels, which means there's a demand for shekel. And the demand pushes up the value. So here we are, because of COVID-19, not because of other forces, but because of this exogenous shock, the currency, right? The Israeli currency skyrockets to an all-time high. So the central bank says, we need to do something about this, because what happens is it creates deflation, but it also pushes down demand for Israeli products globally, because now all Israeli products now are very, very expensive based on the change in the foreign currency. So our products and services issued by Israel outside of the Israeli border now become very expensive in terms of other currencies. It becomes relatively more expensive. So now the central bank says we need to counteract this because this would be devastating for our economy. So they take out the action of trying to weaken the currency, but without hurting the balance sheet, because they're not a reserve currency. The shekel is not a reserve currency. So they're like, well, we need to maintain a balanced, right? A balanced balance sheet, but we have to weaken the currency. So how does a central bank do this? So Israel now starts buying things like gold, silver, US dollars, maybe euro, maybe even euro, for crying out loud. Okay? And then, of course, with that currency, they could then buy bonds if they wanted. But you wouldn't buy a European bond because it's negative. Now, you might buy US treasuries because you do a lot of business with with the United States, and even though it pays almost nothing, it does pay something. Okay? So what happens now is in the vaults of the central bank, gold is placed, silver is placed, and let's just say U.S. Treasuries, bonds, right? Get put there. So literally a stack of paper, bonds, with a maturity date and an interest rate, okay? Bars of gold and bars of silver. Now, these things have valuations, right? They're worth something. So now there's less shekel in those vaults. So the shekel went internationally into the interbanking system. So supply of shekel globally has gone up, which means the value of each individual shekel falls. However, because billions and billions and billions and billions and billions and billions and billions just in January were purchased in gold, silver, and bonds, the value of the U.S. dollar went up, the value of gold went up, and the value of silver went up. Okay, and I told you, 6 months ago when I was explaining this for the Bank of India, I said it's not just India. It's not an Indian situation per se. It's happening globally, and central banks are going to want to continue to do this as long as they need to do this. So you have to pay attention to the relative value of currencies to each individual economy and what each individual central bank managing those economies want. Okay? Would they buy Bitcoin? I don't know what they would do or not do. Okay? I don't think that would be... See, the volatility is too high, I think, Mato. Because they're not looking for risk. They don't want to make money. They just want to weaken their currency. Okay? Okay? So, I don't see Bitcoin right now as being a true medium of exchange or a store of value or even a unit of account. So, no, I don't think they would, Mato. But, of course, they can do whatever they want. Okay? But if Bitcoin can drop 25% in a week and a half, it's not a good store of value. Okay? No, well, it's not a research, Daniel. You should just know these things. Okay? Oh, we can do Bitcoin now if you guys want. Sure. Okay. Cool. Okay. Notice going back to February 1st, these are day trades, right? This is a buy. This is a front run. This one's tricky, but in here, this is a buy. And now you got paid. What do you do now? I don't know what you do now, right? If you stayed away here because of the psych level, it makes sense. But you certainly would have been buying it at 30 or above, right? But these are just pissy little day trades. If we move this to like swing trading, I mean, all you had to do is buy it Sunday last week. And then once again, you're going to challenge me. And you're like, Wayne, well, how do you know that this was going to go higher? Well, A, I didn't. And B, that's a decision for you to make. And if you were a bull, this is an easy buy last week, right? I am long-term bearish on the U.S. dollar. And I believe, right, I believe Bitcoin is a risk-on trade. And that over the next 6 to 12 weeks, we're going to move towards that in all asset classes. So we're watching We're watching oil go up. That's an inflationary, reflationary trade. You're watching bonds go up, and we were talking about that in the swing trading group last week. But nonetheless, interest rates going up is a sign of potential inflation in the future. Potential inflation in the future is a risk on. It's a consequence of risk on. And a lot of this could be the $2 trillion. So you saw that coming too. So again, all of this is gobbledygook. If you're just staring at your chart making decisions, you're not doing it quite right. Okay? Here's the drop from 40 to 30. Okay? Okay, that's a double bottom in a buy zone. And you're like, well, I don't like that. Well, this is a higher high, higher low in the buy zone 1, 2, 3. So that's the easy trade. And now you're getting paid because you held it for a week and a day. Good. If you do something now because of this, once again, you're not paying attention. Now you're going to buy it up here. So what's the next best trade here? Yeah, but that anytime you see something like this unusual move here, gee whiz, there's going to be lots of profit taking. Okay. I don't know, like, golly, I couldn't buy it up there now after the fact. Oh my God, that's just gross. Gross. So, yeah, to do something now after the fact is just disgusting. Ugh. But if you had done the trade 2 weeks ago and now you're getting paid, high five, brother. Oh my God, home run. Okay? Home run. So that's pointing towards risk on. What else could we do in a risk on scenario? Anybody have an idea? If you felt like we're in a risk on mode. Huh? Give me another trading idea. Risk on. Yeah, Highlinder's like Grand Slam. Buy euro dollar. Too early for that, and that's not it's a risk on trade. That can't be the best, no. Pound yen, okay. Pete Smith with me. Sell yen, okay, yeah. Okay. Well, what's the ultimate? You guys are giving me correct answers, generally speaking, right? Buy euro dollar, yeah, but it probably wouldn't be the best risk on, right? Sell yen, yeah, that's a general blanket statement. USD ZAR, there we go. So putting that together, USD weakness is indicative of risk on. We don't quite have it yet, but it should be arriving in the next 6 to 8 weeks. And Rand, because we're already bullish on the reflationary trade, and trust me, South Africa gets inflation. What else? It's a demand creation play. So globally, all commodities, all things will go from low demand to higher demand. So it's just a general consumption play, right? So there's a lot going on there. So we could take a look at exotics. Okay. And you'll see about, an hour ago? No, 2 hours ago, I sold the USD South African Rand. But don't worry about it. I told you I was going to do it last week. What do you think of my entry? Selling Aussie yen would not be risk on. That'd be risk off. Sniper, it took me an hour to get profitable. Actually, I don't think that's true. I think it was profitable in like 5 minutes, honestly. But anyways, because I think it was actually this candle I sold. But anyways, you can see the turnaround, right? All right. So that's a risk on play. I think it's early. I think it's mediocre. It probably won't work out. But when you have a shot on net, sometimes you have to take the shot on net. It's not a to the pip entry. No, that's not what I'm doing. Look at the price. Look at the price. Look at the price. Okay, let's put this way down here. Here's what Wayne do. Here's what the Wayne do. He says, what is 15.00000000000000000? Dude, remember I had a spread too, right? So I actually sold it higher than this. But anyways, yeah, I sold it off to 15. It's not that complicated. It made a lower low, rallied up, and made a lower high. It's in my weekly swing. So look at this, guys. Here's my weekly swing. This is my sell zone. Off a psych level. Notice I sold it after the rejection, not before, so it wasn't degenerate gambling. So it's not that good of a trade. Okay, it'll get a lot better when we do this, but I'll like it a lot more when we get lower than that. So I think I could be weeks early. I don't really care. Okay, my stop's just above the M3, so I've already pulled it taut. So anyways, the other trades are doing mediocre. So I have this one up here and this one up here. So those two trades are working fine. Okay, but remember, eventually, even though this one has like 800 pips, no, probably 700, on the long run, this will be the mediocre play. And the other trade, which I think is on the short run mediocre, if it survives, of course, because 6 weeks is a long time to survive on mediocrity. But over the next 6 to 8 to 9 to 12 weeks, if my analysis is correct, eventually the US dollar will weaken. And the mediocre trade I took today will be the better trade in the future. And the better trade now will be mediocre, but they should both make okay money. And of course, I'm collecting more than 250% a year in interest payments. So I like all of that. Okay. Rookie says Eurozars have positive swap. Yeah, 250% a year. Depending on your leverage, of course. Okay. If you have smaller leverage, you'll cry. You're like, I barely make 100% interest every year. Yeah, that sounds really sad. Right? You only make 100% a year in interest plus asset appreciation? Yeah, that sounds bad. Okay, look at this, a random walk down Wall Street. Look at that, just random. Boy, you couldn't have predicted that in the future, right? Who would have thought it would hit the central pivot and drop? Wow, what an amazing coincidence. Okay. Miss Johnny's question. Even though it opened? Yeah, I don't care about that. Yeah, I don't care about that. That don't bother me none. That doesn't tell me anything. Well, I mean, it tells me somebody bought it, but I know they're wrong, right, Johnny? So I'm okay with that. Here's the other way of looking at it, Johnny. What's the other worst case scenario? I lose 30 pips? I don't care about that either. I want to be in the trade because I believe I'm right. So understanding Johnny's question here, He's like, oh my God, somebody bought it here. I know, right? So he's like, perhaps that means the bulls are going to drive it all the way up. No, it just means either bulls bought it, but I know they're wrong on the long run. I am worried about them on the short run, but just generally speaking, I think they're wrong. And I look at this and like, is this a pivot point where I believe this pivot point will knock everybody out? No. So check this out, Johnny. Part of what I'm thinking is bears exited. It's not bulls buying. Okay? So part of that is like, where would the bears sell? So I'm like, well, typically I got this as a maybe, this a for sure. So now I got my zone. And then I see inside of that a psych level. I'm like, oh, yeah. We got this. We got this, bro. Good deal, bro. Good deal, bro. Yeah, good enough. Okay, guys, good deal. Good deal, bro. Okay, guys. We sell, okay, guys. Yeah. Cool, right? But here's the bottom line. I'm a bear, and this is a sell zone. So you throw in the psych, regardless of this. I mean, I could say I'm so clever. I'm so clever. I just knew this was profit taking. No, it's just this is my sell zone with a psych level, right, Johnny? So if it hits the psych level, drops like a ton of brick and rallies up. Like, look at this one. This is a 15-minute chart, right? So you know I'm really dialed in. I'm not analyzing, right? Check this out. It hits the 15 and drops. Okay? So this is what I look, when I see the low, right? It's the lower high that I want. Pachow! Okay? That's that. Price action. Neat, right? What is my risk-reward ratio on swing trades? Usually like 333 to 333. Okay. A swing trade is typically 333 pips. Sometimes less, but it depends on the time of year, of course. But we joke in the swing trading group, you know, that it's embarrassing if you only make 100 pips on a swing. Like, you have to apologize. And usually you get knocked out for 100 pips. You would never exit for 100 pips. Meaning, like, if you had something like this and your first trade was here and then it went up and then you moved your stop to lock in 100 pips and then you got knocked out for plus 100. Oh, you're so upset. You're like, oh man, what went wrong? That sucked. Because your trade plan, you know, you wanted it to come up here and exit up there. So if you only made 100 pips on a swing trade, it's because you got stopped out for a profit. But you would never have a limit order there like, I made 100 pips, I got to get out. That would be embarrassing. I mean, people would laugh at you. Shameful. It's worse than a loss. If you got 100 pips profit on a swing trade, on purpose, intentionally, it's laughable. It's shameful. But if you get knocked out for negative 33 or even negative 50, that's not a problem. No one would laugh at you at that. You're like, oh man, you got lucky. You got unlucky. Your trend collapsed on you. Right? It happens. You make a good swing trade and it doesn't work out. You're like, oh man, that sucks. I thought for sure you had it. But to purposely go, oh my God, I made 100 pips, I got to get out. That's shameful. People would avert their eyes at you. They would. Like, you got out because you were so excited to make 100 pips. People wouldn't, they couldn't look you in the eye anymore. Seriously. You'd be cancerous. This dude can't even hold a trade to target. Oh, oh my God. Why is he in the office with us? Why is he drinking our coffee? What if he coughs on me and I show up and now I'm pathetic? Now I get out of a trade because I can't hold the target? It'd be like, what if it was infectious? Ugh. Put a mask on that guy. Cover his whole face. We don't want to see him. Ugh. Can't hold a trade. It's gross. Oh, Jeff, you should know I don't have any friends. Come on. All right. So yeah, euro dollar. Somebody mentioned euro dollar as a risk on play. Yes and no. Like that's the right answer, but we have a few things going on. One of the things I mentioned on NFP is I know we're too early for seasonality, but seasonality is based on averages, right? And nothing ever is average. It comes to like an average and then above average and below average, but things are rarely average, right? So this could be an early move in seasonality based on, again, you could argue the $1.9 trillion is enough to make the move early. I'd say, okay, well, that's unusual. That'd be above average. I get that. Okay, cool. So what do we know to be factual? One, I want this to weaken. Two, I think it's a bit early. But three, I have technical analysis as my filter. So, as you know, January, I thought this would fall. By April, I want to be long. So that leaves, right, February and March. That's a long time. But like I said, this might be like if this is average and this is above average and this is below average, this year you could argue early February could be the move. I don't know, but it's part of the thought process, right? It's part of the analysis. Do you think it could move early this year? Well, if they got Janet Yellen doing speeches on the weekend about it, yeah, okay, now it's becoming part of the lexicon. Remember, these trades are based 6 to 12 months in advance. So if you don't get that part, you're not going to be able to. I mean, look, if you don't know what people are talking about 6 to 12 months in advance, you're going to have, I don't know if you can do fundamental analysis, right? You have to understand the decisions are being made not based on today and yesterday, but 6, 12 months in advance. Okay? We're already thinking 2 years out. Okay? So, anyways, going back to this, if this could be above average seasonality, okay, then we would look at this and say this chart traded OOP. So I'm going to have to kill this and go into a smaller time frame. Okay? When you trade out of position, you use the 4-hour 21. So this is OOP and it trailed the 4-hour 21, and then what? It didn't perfectly touch, but it got gosh darn close. Good enough. Okay? Good enough. Seriously, good enough. People ask me like, what did you think about non-farm payrolls, right? 50,000 jobs. Is that bad? Is it good? I'm like, it's good enough. It's good enough. That's all we needed. So now I have to make the decision, okay? Because here's the thing. This chart told us on the first of the month, okay, OOP, you'd ride the 4-hour, you'd get here, and then what? Counter trend. Counter trend. Counter trend. Counter trend. So, in my mind, this could be it. I might be buying now for the rest of the year. I don't know. Now, what if it did this? Well, that could be good too. See, I don't know. I just don't know. But I have to be open-minded enough to say, this might be done. The strength that we predicted, okay? It was strong the first week of February. But remember, by the first week of April, I need to be in multiple euro dollar long trades. So now what? Yeah, I know, right? Now what? And I hope you spent the weekend thinking about it. Now, if you didn't, why not? Okay? Which one of us is made the mistake? If I spent all weekend pondering this, and you didn't, which one's right? I don't know. Okay? So now fundamental, going to technicals, okay, it should fall somewhere between 20 and a half and 21. Okay? If you're doing technicals. Remember, fundamentals, I'm thinking way ahead of this. Way ahead. So I have to ask, how am I going to play in here? Well, this is dangerous. So I would actually like a double bottom. That'd be sweet. Okay? But see, I don't know if it will do a double bottom. It would be great if I had a crystal ball. Okay? It'd be great if I had a crystal ball, but I don't. So now what? Okay? Well, I have to wait and place the trades the best I possibly can. And buying up here is just not something I'm capable of doing. So I have to wait. That's all. Russell did spend all weekend thinking about this. Cool. Okay? It's good. I'd love a double bottom. It would be great. If it goes higher, I would even think, so, right, I may buy it like up in here, but in my mind, even though it did all of that, I still will expect a double bottom. So for example, I would even expect something like this to happen February and March. I feel like February is too early, but we got the right price. Okay? It's the right price. I'm trying to get that as straight as possible. Okay? So now what? Yeah, well, I don't like the left shoulder. I prefer the right shoulder. Yeah, Brinsley, in fact, most swing trades you get out on Wednesday or Thursday. It's pretty rare that I'm holding a weekly swing all the way to Friday. Usually I've hit the target. I'm already done. That's why the swing trading group meets on Thursday, because we're already done that week. We're already done. Money's in the bank, right? So we're setting up the next week. So we meet on Thursday so that we are already in our trades by Monday. It's a mediocre week if your swing trade takes place on Tuesday. You're like, wow, so late? So late? Tuesdays and Wednesdays are usually profit-taking days. Okay? So swing trading days are typically Thursdays and Fridays. That's why I say those that show up on Monday and they're like, what's up, fellas? What are we doing today? We already beat you. We already beat you. We're already in 24 to 48 hours in advance. Sometimes even earlier than that. You're like, wow, we're going to smoke you. Right? So that's how it all kind of fits together. I see the first touch and it's perfect. Doesn't mean I like it. So like I was saying, let me go back to this topic. It could bounce even up to here. Okay. I'm really looking for a sign of a double bottom. It's just so obvious that it's appreciable. And the next one would be like, well, it's still set. So let's say it goes higher, and then maybe like this. Okay. So that's that. I mean, that's that. Now I got to wait. And we're talking about 1, 2, 3, 4, 5, 6, 7. So that's about 7 weeks in advance. Okay. But this is a boring counter trend trade. Should have seen it coming. Pretty obvious. Roll reversal, price action, and pivot target. Okay. You only enter Mondays? Yeah, you don't like gaps? I haven't seen a meaningful gap in trading in a very long time. I'd almost dare say they don't exist anymore because of the liquidity is so much higher than 10 and 20 years ago. Like, so from my perspective, gap risk is very, very low. But it's from my point of view, like gaps would be 200 pips. And you're like, dude, a gap is 20 pips. Oh, well, I don't care about 20 pips, right? So it just, there's a difference, that's all. But I haven't seen a 200, 300, 400 pip gap in Forex probably in 12 years, right? Like, I do remember a few, but I mean, it's been 12 years so that I can think of one. But it doesn't mean you shouldn't worry, I suppose. I'm not saying don't worry about it because it is a risk, but make sure you understand the full risk. And I don't trade Mondays, I trade Sundays. So it's pretty rare for me to jump into a trade on Monday, for a swing trade, that is, because most of them would have been a Thursday, a Friday, or a Sunday, right? Like, do you guys remember the video I posted last year on Super Bowl Sunday? I'm driving in my car through Tennessee, and I'm like, you need to be doing your job. You need to be doing your job. What's more important, the Super Bowl or the rest of your career? You say you're disciplined, but you're just going to get drunk, and you're not going to do your job. Remember, your job on Sunday is to do your swing trades, right? And that's how, like, this trade on the Rand was great because I had planned it last week. Okay? I planned it last week. I outlined everything on Friday at non-farm payrolls, right? Oh, you're in Memphis? Interesting. Yeah. I was in Nashville, so still a few hours away. Yeah, Brinsley says, your Sunday is my Monday. Awesome. Yeah, the market open is what it is. It's all about market opens. Whether it's monthly, whether it's weekly, whether it's daily, whether it's session, like the Asian session open. I place a lot of trades there. London open. Amazing. Probably the best time of day to trade is the London open. New York open. Well, the way I've described the New York open is you can get lucky in London, but New York is a street fight. It's hand-to-hand, knife-to-knife, personal, in your face. You can't get lucky in New York. London, dude, if it's the top of the market, sell it. You're done all day. And if you're wrong, you're going to be wrong quickly, right? So I have to do that kind of day trading, right? I have to do that kind of day trading in Asia. Okay? I just answered that question. Could you give me some advice how long a swing trade should last? My definition of a swing trade, it would last, let's say, Thursday to Thursday, Friday to Wednesday, Monday to Wednesday, Monday to Thursday. Okay? Oh, really? 500 thumbs up? Thank you, guys. Thank you. I appreciate that. Yeah, thank you for pointing that out. That's really cool. Well, then, out of respect for you guys, why don't you let me know the next currency pair you'd like me to cover, and I'd be happy to do that. Where are they from? They're angels from heaven. Let me know what you'd like me to cover. I did gold and Bitcoin and silver and oil and Brent and euro dollar, and I did some Aussie and some CAD, but we can go through some of that. Team SoundZone, yeah, how come just, I don't know. YouTube doesn't promote me, even though I have 5,000 videos on YouTube. Euro Kiwi, that's gonna, Palladium, don't have it. Pound CAD, let's try to decipher what some of you guys are doing. So like pound CAD, pound is mediocre, CAD is strong. I don't think you're gonna get a good opportunity on that one. Pound versus dollar, pound is mediocre and dollar is mediocre. So I'm not sure why you would want me to cover that. Pound Swissy, pound is mediocre, Swissy is weak. So that one's better, but again, you're really just benefiting from Swissy weakness, but you're not going to gain anything currently from pound. Pound, Swissy, Aussie. Swissy is weak, Aussie strong. That's a better trade. So let's go there. Aussie versus Swiss franc. Okay. So let's start here about, you have to analyze first and foremost where you're going. Okay. Where are we going? This should be self-evident. The bottom of this market on the 1st of the month, so it's the 8th of the month. On February 1st, there was a buy right there. Okay. Based on that buy, the target is here. So the target is 70. The entry was at 68. This is called position trading. It's a form of swing trading. It's not a guess. It's not my guess. It's just what the charts say. This predicts this. So that's where we're going. We're on our way to 70. Our challenge will be here. Okay? And that's at 69. Okay? Great. So what price are we now? 69. All right. So there probably will be some down before there's some up. Let's go to a smaller time frame. Okay? What do we know about this? Well, we know from the regression y equals mx plus b. Okay? Right? X and y axes, the intercept is b. Therefore, m is slope. M is equal to rise over run. Okay? And therefore, m is greater than 0, and we're in a bullish trend based on statistics. Statistically speaking now, we are in a trend. That's all. Not, again, not my opinion. It's just the algorithms doing the math. So at this rate of change, we should be, just tickety-booing our way through. I would suspect that this 69, we will be challenged. There'll be some profit taking. There'll be some bearishness. So I would say we come down to the lower part of the regression and then work our way back up. It looks like we'll hit the first target, our conservative target, probably hit what, tomorrow? Okay, so let's back out. Oop, okay. So what do you think of this? So we have some down first, then we get some up, then our first layer of profit taking happens. It comes down, we get a roll reversal off this top. And now you're buying at 69 as support, not as resistance. Oops. And we resume, we hit this target, and you exit at 70 on Thursday. Okay. Iago says, Wayne, can you talk about strong yen in March? The way I translate everything is that has to do with Japanese repatriation for taxes, that the fiscal year end for Japanese businesses is March 31st. So money will travel to Japan to pay taxes. I would I don't think the average Japanese chief financial officer of a multinational corporation takes risks like waiting to the last second, the last day, to move money from one country back to Japan. So the way I look at it is, there should be Japanese yen strength going all the way into the first week, or the middle of March. And by then, I would start tiptoeing out of those positions. So let's say in the next 2 weeks, we get Japanese yen strength, and that should last until some point in the middle of March, and then I'd probably start unwinding those positions and looking for a rotation back the other way. Okay? Okay? Cool. All right, so that puts us on target for Thursday. Okay? Okay, so some of this, I think, if you're watching Swiss franc bond yields rising, I think part of this is that the Swiss National Bank is going to have to buy those bonds and drive down some yield. So I think that's what's going on here. Notice the typical, you guys like swing trading, right? This is a swing buy, this is a swing buy, this is a swing buy, and this is a swing buy. Straight out of the training course, nothing complicated. That's a November buy, a January buy, a February buy. No, this is a February, January, December, November. Yeah, I guess. Yeah, I don't know how I missed that. But anyways, very cool. Straight out of the swing trading course, easy peasy lemon squeezy. Okay. Another way to define it, you're like, Wayne, that's hindsight. All right, well, let's just put swing trading bullish bias. And this will tell us our buy zones. You ready? Okay. That's weekly. I was giving you monthly, sorry. Position trading, where is it? Position trading bullish bias. Got to go further up. So put it that way. So these are in advance, not behind, right? So you can see there that says up, this says up, this says up. And check this out. We're already identifying next month. So if I back out to daily, you can see next month is printed already. Now, of course, it's going to adjust because we're still, we're just starting our second week, but you can see what these are telling us. Now, this didn't work because we were not bullish, okay? This is a bullish period. This is the bullish period. This is the bullish period. This is the bullish period. And most likely, we'll get something like this in the next 3 weeks. So most likely, we need to breach through 69, what is that? Let's say we breach through 69 to get through like 69.50. Then it comes back down. And the next one is this up. So these are monthly, so we have to do it like this. Okay? And of course, because of that, remember how you do these calculations. So you take the high, you take the low, you look at the close, so you get a weighted average. Right? Divide by 3. The math here is H plus C plus L. Sorry, got it out of order. It doesn't matter. Divided by 3. So you get a weighted average, which I consider sentiment. Okay? Because the close tells you how the market felt at the end of the period, not just the beginning of the period and the high or the low of the period. But we also want to know for the new period, how is the market feeling about the last period? So it's sentiment, right? So now to do this math, what it's doing is it's looking at the high and the low, and then it's treating that as a close. So it's moved up, but that's not the whole picture. So if you're a bull and you bought down here, you are expecting a higher high, and then it should retrace back to here. You would stink in the future. So you could actually calculate this and say, well, if the low is, we'll call this what, 67.50. The low is 67.50, and you believe the top will be about 69.50. Okay, now you got your projected high and low, which now you're projecting over top of your projection, right? Your high, your low, and then you're going to say, well, the close is going to be back into here on the roll reversal. So you're going to be a buyer at a dip to 69, right? So now you'd have to do this. You take 67.50 plus 69.50. I'll just put 69 plus 69.50. Okay, divide that by 3, and you get your new projected central pivot point for March, which would be the basis of your buy. Okay, next, right? Okay, right? So now you can get your new central pivot. This man failed in maths on class 12 2 time in what? What's going on, Rohan? Actually, I got an A in statistics, so. In graduate school, in graduate statistics, I got an A. But I'm not a math guy, no. So you could probably tear me up when it comes to math. That is not something I'm naturally good at. I had to work hard for that. Okay. Interesting though, right? So now you could set your own plans and you don't need an indicator. Calc. Okay. So you could say 67.5 plus 69.5 plus the retracement back to 69 equals, divided by 3, 68.6666. Okay, so now you go here. Let's drop this horizontal line. And you say 0.69666667. And that is your projected okay. Sorry, I was like, that doesn't make sense. Hang on, let me fix this. Sorry, you see my mistake? It's not 69, it's 68. Sorry. 68. 68, 667. There we go. So what we're saying is, in the future, we should be able to get up to here, come back, and you will buy it. Now, why would you buy it? What's the why? Not the fundamental why, but the technical why. The fundamental why, y'all, is that this is the March projected central pivot. Okay? So I would put it into a zone, right? Okay. Now, if it goes too high, if it instead hits 70, that could be a game changer because that's the ultimate bullish target, and that might get all the bulls out. Okay. Coolio. Marson TV. Are you having problems signing up, Marson? What's the problem? All right. So what would you like me to cover next? Let's do one more. Did I do Bitcoin? Yes. Aussie Kiwi. Well, let's go back and check our relative strength. Aussie versus Kiwi. It'd be modestly up, but not a great trade. Pound yen, modestly up and not a great trade. Next. But guys, I can tell you're not doing your relative strength. So before you do anything, you would open up a profile like this. Pound is moderately up off the dollar. Pound is moderately weak versus the euro. Pound is weak versus the Noki. Pound is strong versus the Swiss franc. And pound is neutral versus the Aussie. Why would you want to trade something that is neutral? So I translate that into this because you guys probably see this easier. But like I can do it, right? Just looking at that, it takes me about 2 seconds, right? So this is what I always used to do before I had those indices. I'd look at this and say, no, not really interested. So like you want to trade pound yen, like why? I get it. The yen is weak and you can do that quickly. So you look at, you scan this and you're like, yen's weak versus Aussie, yen is weak versus euro, yen is weak versus Kiwi, yen is weak versus CAD, although CAD has lost some move here. And pound is, right, yen is weak versus pound, but it's lost some move here. So I can tell you CAD and pound are generally weak. Japanese yen is relatively weak. And the other ones are moderate to strong. So I look at that and I'm like, okay, stay away from CAD, stay away from pound. And yeah, so you see, like you guys are not doing relative strength first, and that bothers me. Your job is to find strong versus weak. And you're doing like pound. A lot of people are asking for pound and Kiwi, but they're neutral. Why would you trade something neutral? You see that? So you're skipping a step. That's my advice to you right away. Do your relative strength analysis first before you make decisions on what to trade. So out of when I've done requests so far, about half of the requests are like, Wayne, show me how to trade a mediocre trade. I don't know how to trade a mediocre trade. So do your relative strength exercise first. Okay? Okay, guys? What news makes risk on? News doesn't make risk on. Fundamentals make risk on. USD yen. Well, USD is neutral, yen is weak. Okay. So one of the currencies we already did today was Aussie Swiss franc. That makes sense to me. When you look at Aussie, it's one of the strongest currencies in the world right now. When you look at Swiss franc, it's one of the weakest currencies in the world right now, out of the majors, right? So like you should be on this one. Okay? And you're like, Wayne, I don't trade Aussie Swiss franc. Okay, well, when you do a relative strength exercise, you'll say you do trade Aussie yen. Okay? So, like, we can go now and day trade this sucker. Okay? Day trading bullish bias. Let's zoom in on a 1 hour chart. Okay? These green zones are your buy zones. Why do I use them? Because you would have bought tomorrow's trade already. Do you see that? The trade that you're doing now is based on tomorrow's analysis. Okay? So if you get this right, what it's telling you is you should hold your trade longer than you typically do. Now, of course, it can hit 81 and drop and you get knocked out of break even and no one's going to laugh at you. Okay? But what this chart is telling you is that if you got this right, and it looks like you did, okay, that buying here should be worth a little more. Okay? Like, I'd guess pretty close to 81 and a half on a day trade. So 100 pips. So I would treat this based on you're going to make 100 pips or lose 0. Because now you know where the challenge is going to be, right? You know the challenge is going to be off the top. Now, because it's a bullish trend with fundamentals behind it, we also know they're going to lose. Or at least the assumption is they're going to lose. You know they're there, but they don't got the gall. They just don't got it. Okay? So that's why I'd say if you bought this, now because your threat is at 81, you would move your stop from here to like break even here. And now you should be going for 100 pips profit. Okay? And you're like, Wayne, you just told me you would laugh at someone that only made 100 pips profit. No, I said anyone swing trading. That's a day trade. That's just a pissy little day trade, right? Risk 33 pips to make 99. Cool. So remove the risk now. Move your stop from negative 33 to negative 3 and let the sucker run so you get 99. Okay? So that's straight out of the day trading course. Nice. Good job. Okay? Cool, right? Cool beans. All right, so I need you to spend more time doing relative strength. I think that was clear today. Would you like me to show you how to do relative strength again? Excuse me. But it's clearly something that many of you people, you guys, you people sounds wrong. Clearly, many people are not doing it. And it scares me that you just trade pound yen every day because it's pound yen. And you're like, whoa, what do you mean? Okay, yeah. Anybody else? Oh, my stream just stopped. Nope, now it's back. I didn't do that. I didn't do that. That was excellent. Maybe you didn't see it, but the stream died, went from hero to 0 and then back to hero again. So hopefully it doesn't drop. All right, cool. Can I get a few more likes, please? Couple more likes. All right. Let's start with this. Let me mark this. Okay. All right. So I got a bunch of questions. Let's kind of start from the beginning. I got a bunch of questions. Hey, Wayne, can you cover pound yen? Can you cover this, that, or the other thing? And most of them were mediocre requests, so I didn't do them. And it was clear to me that people have not done relative strength exercises first. Now, the point of doing a relative strength exercise is that you're supposed to be trading strong currencies versus weak currencies. The worst case scenario is trading 2 weak currencies against each other or 2 strong currencies to each other. Now, trading 1 weak currency and a mediocre currency or a strong currency and a mediocre currency will lead to mediocre results, and that's probably not what you're looking for either. Okay? Richard says, do you do relative strength on 1 currency? Well, then it wouldn't be relative. Relative means one compared to another. Okay? So what we're trying to do is strong versus weak. Now, when I first started trading roughly 20 years ago, I didn't even have charts. I just had a trading platform with these blinky buttons. and you'd click buy or sell, and that was that. But I got some statistics too on that trading platform, and one of the things I looked at was overnight volatility. So I think it was how far from a price did something move over the last 24 hours. So it was a weird form of volatility, but it showed me how much things were moving and what direction, right? So you get some positive numbers, you get negative numbers. And so I'd spend more than an hour every single morning capturing that data manually in an Excel spreadsheet, and then compare all the things that gained strength overnight and all the things that lost strength or went weak overnight. So I'd start with the pound versus the Swissy, pound versus the dollar, pound versus the Aussie, pound versus the Kiwi, pound versus the yen, so on and so forth. And I'd plot all of this. Then I would do Aussie versus pound, Aussie versus euro, Aussie versus Kiwi, Aussie versus yen, and so on and so forth for every single currency. And then I'd map it all out. And at the end, I'd find out which currency was actually the strongest over that period of time, which one was second strongest, which was third, which ones were neutral, which ones were third weakest, second weakest, and the weakest. And then I would match strong versus weak. So the number one strong versus the number one weak, the number two strong versus the number one weak, the number one strong versus number two weak, number two strong versus number two weak. And from that, I'd get, if it continued, I'd get some reasonable results because I was always pairing pretty strong versus pretty weak. Okay. Now, again, we're doing this exercise using technical analysis, and it's subjective, so you're going to have to make decisions. But ultimately, we're doing it for the same reason. We're trying to understand strong versus weak. And when I took requests of what currency pair should I cover next, at least half of your requests set me up with mediocre trades. And I'm like, why would I care about that? So that's the table is set. We're trying to pair strong versus weak based on your analysis before you even set up a trade. Because the worst thing is to set up a mediocre trade from scratch and expect good results. Okay? All right. So you might say, Wayne, there's a million different lines on this chart. So let's clean this up just so, I don't know, maybe you're new or something, and that's too many. So we'll say simple. Be a simple kind of trader. All right, simple. Simple template, simple template, simple and template simple. Cool. All right. So they're relatively simple charts now. Okay. This one we don't need because it's not even a pound. So what am I missing? Pound dollar, pound euro pound. Pound Noki, pound Swissy, pound Aussie. Is there a pound Kiwi on here? Pound Kiwi? Pound Noki. Okay, let's do this one. Pound Kiwi. So Great British Pound, Great British Pound, Great Aussie, Swissy. Is there yen on here? There should be, right? I don't even see yen. Huh. That's going to be important. Let's move this window. No, let's move this window. There wasn't even a pound yen, huh? Oh, no way. Okay, we definitely got to have pound yen. All right, cool. So now we have pound versus most, if not all majors. Okay, great. Great. So very subjective. The first thing is you want to make sure we're all in the same time frame, what I call time congruency. 4 hour, 4 hour, 4 hour, 4 hour, 4 hour, 4 hour. Good. Okay. So then the next thing is you want to look at numerator and denominator. Denominator is the one on the bottom. Numerator is the one at the top. So we have a numerator, a denominator. Okay, we don't want that there. So let's move a numerator to a numerator. So pound versus dollar, pound versus Norway, pound versus Japanese yen. Okay. Pound versus euro versus pound. Okay, so we have one that's off. Okay, so this is numerator, and this is denominator. All right, so let's isolate the Great British Pound. I'm going to get my arrow. Okay, based on your analysis, your opinion, okay, you might say pound is a bit stronger than the dollar. Okay? You could say over this period of time. Or you can say this period of time. Well, that's your decision. Okay? We'll say more relatively. Okay? More recently, pound has been stronger than the dollar. But Norway's been stronger than the pound. Okay? Pound has been recently stronger than the yen. Okay? Pound recently has been stronger than the Swiss franc. And pound has been weak versus the Aussie. And now, this is inverse. Because now we're on the denominator. So down means strong. Okay? And up means weak. And you have this kind of, oops, let's make this blue. Pound was stronger. Oh, jeez. Gee whiz. There we go. Pound was stronger than the euro, but now euro is stronger than the pound. So pound kind of strong versus the dollar. Pound definitely weak. Pound definitely strong. Pound kind of was up and now is down. So kind of generally strong, but definitely weak. And then was strong, but now weak. So can you see like there's mediocrity in this? It's definitely strong. It's definitely weak. It's definitely strong. It's definitely weak. This was strong, but now is neutral. It was strong, but now is neutral. So they're like, what is this? It's gobbledygoo. Okay? It's gobbledygoo. It's unclear whether pound is strong or not. It's neutral. What's impacting it is whether the dollar is weak or whether the Japanese yen is weak. So here's the way I'd look at it. Pound is not strong. Okay? Pound is not strong versus the euro. Pound is not strong versus Noki, Norway, right? But it is strong versus the yen. It is strong versus the dollar. Okay? It was strong versus the Swiss franc, but it's definitely not here. So what it's telling you is Aussie is stronger than the pound. Norway is stronger than the pound. Those are strong versus the pound. So if pound is neutral, we've learned here that Australian dollar is strong. It's stronger than neutral. We know the Norwegian krone, right? It is strong versus the neutral. So I could declare by this relative strength, Norway is strong, Aussie is strong. I want to be buyers of these things, okay? But not necessarily against pound, because pound is kind of neutral. There's got to be something weaker. So now I look at here, so what's weaker than the pound? Japanese yen is definitely weaker than the neutral pound. And it looks like US dollar is weakening against the pound, but the pound is neutral. So dollar is definitely weak. Yen is definitely weak. Swiss franc is generally, but over the last day, is lost some of that weakness. So it's a little more neutral, but trending up. So we'll just isolate that and say neutral today. Maybe tomorrow Swiss franc will weaken. Not interested in trading the euro. Okay. And so what we know here, based on this, pound is neutral and not really worth trading today. Okay? It's just neutral. Like, you're going to get lucky, you're going to get unlucky. But what did we learn? We did learn Aussie is strong. We did learn Norway is strong. We did learn yen is weak. And we did learn US dollar is weak. So at the very least, and by the way, it takes me 2 or 3 seconds to do this exercise. At the very least, I want to look at the Norwegian crown to buy versus selling the US dollar. The Norwegian kroner to buy versus the Japanese yen. I would like to buy Aussie yen. You see that? I'm looking at pound charts. I'm like, oh, I want to buy Aussie yen. Okay? I want to buy Norway yen. You see that? But I want to stay from pound because it's mediocre. It's neutral. Not interested. Okay? And it takes me a couple of seconds to say, oh my God, look at Aussie, look at Norway. Oh, we should be on those. And then you should switch your charts. Okay? Now, I use indices for you guys just because it's quicker and easier. But I don't like giving you this. And by the way, there's your neutral pound. There's your strong Aussie. I don't have Norway. There's your weak yen. And you can see dollar is weakening. Okay? So you don't need these types of charts. And I was hesitant to even put these up. I went like 15 or 20 years of coaching being hesitant to show you this stuff because you look at it and go, well, it says yen is weak. Well, how do you know? You don't even know the math that it's doing. It might be dumb math. And there's so many indicators out there. They're just pathetic. The math isn't even correct. And then I say, well, you're making your decisions on this. What is it doing? You're like, I don't know what it's doing. It's just telling me yen is weak. So that's the worst way. The best way is you should look at what I call, like in this case, scan yen. And look, yen is weak versus Aussie. Yen is weak versus euro, but not as weak because we know euro's weak. We discovered that on the pound trade. Pound and euro were neutral, but pound, relative to other things, were weak. So euro's weak too, relative to everything else. That's why it's called relative strength exercise. We also know New Zealand is doing all right because yen is weak. Okay? Yen is weak, so CAD should do all right. Okay? And look at pound yen. We know yen is weak, but pound yen's barely even moving compared to Aussie. Okay? We know euro's weak. Euro yen isn't falling, but that's because yen is weak too. So euro and yen are weak and nothing's happening. Pound and yen are weak, so nothing's happening. CAD and yen is kind of going up, but it's a laggard. It's slightly bullish. They had a terrible jobs report on Friday, but oil's up. So it's kind of both. It's slightly positive, but we know Aussie and Kiwi and Norway are killing it. So you should be long those ones because you're pairing the strongest versus the weakest. And therefore, you will do better as a currency trader trading with relative strength that works for you and not against you. So hopefully that was helpful. If it was, a thumbs up would be great. Okay, I'm going to set up the highlight here. Give me a few seconds. Wait, there's no sound. Hang on. Turn that speaker on. All right, so how to do relative strength to trade strong versus weak currencies. Okay, I don't hear sound anyways. I can't tell what it did. No sound, huh? Hang on. I'm trying to do this. Hang on. I guess I'll have to just leave it, and I guess that's what it's doing. Okay, great. I can't hear. I can't test it. I'm just trying to keep that as an archive. All right, well, create. We'll see what it did. If not, I'll try to do it. All right, so that'll be a separate video. So we are now ticking over to hour 2, so I will bid you adieu. Thank you for being a member of Forex.Today YouTube community of 17,000 currency traders. Thank you for being a client of tradersway.com. If you need a broker, you need one that's trustworthy, and they've earned my respect. Maybe give them an opportunity to earn your respect too. Open up a demo account, tradersway.com. What else? If you need video training, live group training, book reading training, book training. The links to all that are in the description below. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day.